Hi guys, Stanley here. I'm the co-founder of valueinvestasia.com, an investment portal where we'll give you investment news and in-depth analysis on listed company every single week. So if you're new to the channel, remember to hit that subscribe button so you'll not miss out on any of our videos. Anyway, let's talk about value investors' favorite stock today, Berkshire Hathaway. Berkshire Hathaway released its 2021 shareholders letter late last month, and as all value investors around the world who follow Warren Buffett will find that his letter is one of the most important and informative documents on investing. So in this video, let us summarize the 8 key points from this year's letter. Number 1, Berkshire Hathaway transformation. Berkshire is often seen as a large financial conglomerate with its insurance businesses and also stock investing. However, Berkshire has really transformed itself from just a textile manufacturer into a multinational conglomerate holding companies. Today, it owns and operates more US-based infrastructure assets on its balance sheet than any other American corporation. While the world is celebrating asset-like businesses, Berkshire is really very proud of itself as the most asset-heavy company in America. Although it might seem too outdated, but I think Buffett sees these asset-heavy companies as irreplaceable assets that they own. And because they are less sexy, he might see them as also undervalued and operating in a less competitive industries. Separately, while some of the world's biggest tech companies have complex company structure to reduce its corporate tax, which they call it tax planning, Apple, Berkshire really prides itself as being a responsible taxpayer. In 2021, Berkshire paid about $3.3 billion in tax. Compare that to the total corporate income tax receipt of about $402 billion this year. This means that Berkshire is really contributing close to about 1% of the entire US corporate tax. Berkshire has a huge stock portfolio worth more than $300 billion. They include popular names like Apple, their largest position, and also companies like Coca-Cola and American Express. Berkshire's declaration of their buying and selling in the public market are also well followed by many investors. But Berkshire is more than just a stock market investor. Berkshire sees itself as having 4 big main businesses. And from its stock portfolio, Apple Inc. is the only public company that made it into these big 4. The other 3 includes their insurance businesses, BNSF, their railway business, and their energy business under Berkshire Hathaway Energy. All these latter 3 businesses are operating subsidiary of Berkshire Hathaway. So in Buffett's view, the key value of the entire company still comes from its private businesses and not its stock portfolio. But of course, it is Berkshire's stock portfolio that gets the most coverage in the company. After all, investors around the world are very interested to know what are the stocks that Warren Buffett are investing in. Over the years, there have been very little changes in his portfolio as Buffett tends to buy and hold on to most of its investments. However, there are some interesting additions to Berkshire's portfolio in recent years. They are mainly investment into Japanese trading companies, 3 of which are now part of its top 15 holdings. They are the Itochu Corporation, Mitsubishi Corporation, and Mitsu & Company. These Japanese trading houses are commonly known as Sogo Shusha, a conglomerate that imports everything from energy, metal, food, and textile into Japan. These trading houses are key contributors in growing the Japanese economy and contribute greatly to the globalization of its local companies. So it seems that Buffett is really just betting on the Japanese economy as a whole going forward. Berkshire has always been hoarding a lot of cash as Warren Buffett finds it harder and harder to find huge, attractive investment. He also pointed out that the low interest rate environment has moved most asset classes to extremely high levels. Thus, if he does not start seeing stock prices come down significantly, its cash pile might continue to grow beyond the current $144 billion. The only stock that Berkshire has found attractive in recent years might be Berkshire itself. This is because the company has repurchased about 9% of its shares, amounting to about $52 billion in the past 2 years. Nevertheless, Buffett stressed that Berkshire repurchase must offer appropriate value to shareholders to make sense. Just as he doesn't want to overpay for shares of other company, he also doesn't want to overpay when buying Berkshire shares. Hence, Buffett's share buyback has always remained price dependent. So whenever Berkshire is buying back its own share, Buffett is also indicating to investors that he feels that the company share is undervalued. The insurance businesses have been instrumental in Berkshire's growth. We know that Buffett often explained each insurance business provide capital for him to invest with their float. This massive capital costs next to nothing and is typical long-term in nature. And couple that with Buffett's ability to achieve very high rate of return, it helps Buffett create this amazing compounding machine. And besides insurance, Berkshire was structured as an investment holding company rather than a hedge fund. This means that Berkshire will not be forced to pull out its capital during a market decline, unlike many hedge funds. Investors who want to sell Berkshire stocks will also have no impact on the capital available for Buffett to invest. What we individual investors can learn from this is that we should really invest with money that we do not need in the short term, and so we can truly become long-term investors. And the current stock market downturn is a true test to how strong our will and ability will be to make us long-term investors. In the annual letters, Buffett shares the history of how a business leader named Paul Andrews and his wonderful business called Tektronix, or TTI, led Berkshire to one of its most important acquisitions, BNSF. Paul was the founder of electronic component distributor Tektronix, which was later named TTI. Paul has grown the company from its first year sales of just $100,000 to a business now with turnover over $7.7 billion. And that was back in 2006 when Paul was age 63. He found himself with one nagging worry. He was concerned about the legacy of his business and what would happen to the many people depending on him if he unexpectedly died. But selling to a competitor was out of the question for him, and he did not want to hand over his business to just a financial buyer or equity firm. Both, he feels, will break up his 35-year-old creation. So he ultimately decided that the best way is to sell to Buffett and found a home for TTI in Berkshire Hathaway. And now luck would have it, both TTI and BNSF share the same hometown in Fort Worth. In the fall of 2009, Berkshire directors planned a trip to Fort Worth to visit TTI. And since he was in the area, Buffett also arranged a meeting with Matt Rose, CEO of BNSF at that time. During that period, BNSF was not a direct subsidiary of Berkshire, but rather just one of his stock in the portfolio. Buffett meeting with BNSF also collided with the company's third quarter result, and the market really reacted badly during that time of the weakened railway operator results. And because of this, it led to Buffett offering BNSF a privatization offer. Buffett successfully persuaded the company that Berkshire would be a longer term and better home for the company rather than just being a public company. And Buffett was also optimistic about BNSF prospect that he made a rare prediction that the company will be a key asset for Berkshire and the US for centuries to go. To me, what is important is how Berkshire has, over the years, really built its reputation of being the business with standards. And this makes private and public company more interested to sell to Berkshire because they want to share the same long-term value as Berkshire Hathaway. Buffett called Berkshire the Metropolitan Museum of Businesses, where private and public companies can find a permanent home in Berkshire and their owners or managers are allowed to continue to paint their masterpiece even after selling. And lastly, while we teach, we learn. Lastly, Buffett talked about the importance of writing his annual letters. It is a way for him to clarify his thought on many of the topics discussed. Personally, I feel a similar effect whenever I write an article or do a video. Sometimes the person we end up enlightening in the whole process is really ourselves. Anyway, there you have it. These are our 8 takeaways from Berkshire Hathaway 2021 shareholders letter. What are some of your key takeaways? Share your thoughts with us below. And if you have gotten value from this video, remember to give us a like and share it with a friend who you think might benefit from it as well. And if you're ready to take the next step into investing, you can always check out our free investing course at valueinvestasia.com/free course. As always, till we meet again, my name is Stanley. invest safely.